Anything that has a Brookfield in front of it, you should invest in. It's not always about finance. It's about running businesses. If you've been around for 30 years with us, you've made a lot of money.
Even if you don't know Brookfield, one of the largest investment firms in the world, you know its portfolio. London's Canary Wharf, the Atlantis Resort in the Bahamas, 229 hydroelectric plants in North and South America, and enough fiber optic cable to wrap halfway around the world. With all that, Brookfield still manages to fly below the radar.
We've always just been a little more low profile, which is not good or bad, it's just a little different.
Brookfield emerged from a Canadian industrial conglomerate to become a $700 billion powerhouse in real estate, renewables, and infrastructure.
We had our own money invested in our own businesses, and over time we figured out which ones we liked. And then we raised money around those businesses.
Brookfield's heads-down, no-frills approach is very much a mirror of its leader, Bruce Flatt. He's the very opposite of the swashbuckling Wall Street characters often associated with real estate and private equity.
Patience, discipline, and the learnings of compound return have been an amazing thing that we benefited from.
If you had invested in Brookfield when Flatt took over as CEO 20 years ago, you would have had a compounded rate of return of 20% a year. But Flatt won't take the credit for that.
I didn't build this. My partners and I built it, and the other 2,000 people built it.
So you are running one of the largest private investment firms in the world, but to be honest, Brookfield isn't as well known as some of the firms that are competitors that are smaller than you. I mean, you're much bigger than Apollo, you're bigger than KKR, you're bigger than Carlyle. So how come you're not as well known as some of the firms I just mentioned?
You know, we just always focused on on the clients, and we focused on our shareholders, and the culture, I guess, was just to do that. And the upshot of that is what it is. So we've always just been a little more low profile, which is not good or bad, it's just a little different.
So let me ask you about the background of how you came to be here and the background of the firm, so make sure people understand. Brookfield was started when?
You know, it's been a listed company for a long, long time. And the current group took it over in the late 80s, early 90s.
And today, you're managing assets under management of how much?
Circa 700 billion. And really what happened is, it was an industrial conglomerate. Similar to what Berkshire Hathaway was, a mini version of what Berkshire Hathaway was, and we started that in Canada. And we built out those businesses, and then decided that the way that we could fund the business without taking undue risk was to start partnering with clients, with institutions. And eventually, we brought institutions into deals, and eventually we did what many of the other private equity firms were doing, which was raise funds.
So for people who don't fully follow your background, what you're saying, I guess, is that initially you basically were investing the money that your company had. It was a publicly traded company from the early days, is that right?
Yes.
And so you invested off your balance sheet, and then subsequent to that, you went out and raised third-party money. So you now do both. You invest your own balance sheet, which is considerable, and you invest third-party money, is that right?
Yeah, which I guess, and that's really the difference of where we came from and where many of the private equity firms came from, like Carlyle, was you started a fund management business, raised funds from people, and invested their money. We had our own money, invested in our own businesses, and over time we figured out which ones we liked. And then we raised money around those businesses. So for example, we were in the mining businesses. It was very volatile and it was tough all around the world. We decided to sell off the mining businesses, but what we figured out, there was two businesses in there that were spectacular. One was owning global infrastructure. Many of the things we built for mines were global backbone infrastructure. So we took that and learned it. We actually kept some of the assets and started an infrastructure business. And our renewables business today, which is one of the largest in the world, started because we had hydro plants in our mining businesses. And we had water facilities that produced renewable power Then we got into, later on, solar and wind and all the renewables that are today.
You are the CEO. Are you making the investment decisions? Do you sign off on them? And how many major investment committee meetings do you have to have a week to approve these deals? And how deeply can you now get into each of these deals?
Look, we have a great team, and they know what comes out of the businesses, and I see we have an investment committee for everything, and I sit on every one of them. But really, what happens in today is that anything that's important, our people tell me beforehand, and we've already made a decision. So I'm in constant communication with them all. But yes, we approve 10 deals a week.
So you became the CEO in 2002. Since that time, the market capitalization of Brookfield is up by about 2,000%. And the stock price is up about 1,800%. So that's pretty good. You have a lot of shareholders calling you, thanking you all the time.
Look, anyone that started out with us then has done really, really well. So they're all happy. You can't. Maybe there's somebody that's unhappy, but if you've been around for 30 years with us, you've made a lot of money.
So you were educated as an accountant?
Yes.
Now, I have a high regard for accountants, particularly when tax season comes along, but how did an accountant become the head of this gigantic organization? What was the skill that you used to kind of go from being an accountant to running this entire large company?
So when we started, it wasn't so big. It was pretty little. And I would say by the people we have, we just learned along the way. And we started investing. We were investing then, and we grew the business. And patience, discipline, and the learnings of compound return have been an amazing thing that we benefited from.
And you seem like a low-key guy. Don't seem like a screamer or yeller. What happens if something goes wrong and you lose money on something? Do you yell and scream at people? Do you fire them, or do you have somebody else do that?
Look, I would say the culture of our place is try to make as many small mistakes as you possibly can, which means that you're testing the windows every day, but don't make any really large mistakes. So we try not to make big mistakes, but the little mistakes we make all the time. And so people are encouraged to make small mistakes, and that's a good thing. And because it means that we're testing the limits of where we should be going.
Have you ever made a big mistake that really hurt this company, or you haven't had that in 30 years or so?
Look, we've made lots of little mistakes, but you can't compound at 17% for 30 years or 20% annualized for 20 years and make any big mistakes. It's impossible.
So the key to your success, what is the secret sauce? What did you do over the last 20, 30 years that made you pretty much about the biggest of these kind of private investment firms in the world? What is it that you did that nobody else quite did?
Look, I think because we started off as an industrial conglomerate, we're a little bit different. We're operating investors. We ran these businesses, and today we act like, and we do run these businesses, and that's just different. It's not always about finance. It's about running businesses, and so I'd say the focus from an operating perspective, but also understanding investments and the compounding of returns has been probably the two single best things that we've done. Infrastructure moving into private hands is good for everybody. It's good because it brings the debt down in the countries. It's good for individuals because they often get a better service and often at a lower price.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries. The person who was the head of the Central Bank of England recently joined your firm, Mark Carney. What does Mark Carney bring to your firm? He's a central banker. Why do you need a central banker in Brookfield?
So we've known Mark for a long time. He's a special individual. In addition to being a macroeconomist and a central banker for a long period of time, he has a passion about the transition of the world to lower carbon. And we brought him in to help us put together a strategy and fund to be able to invest in low carbon, to transition the world to low carbon. And we just raised, or we're in the midst of just closing out a $15 billion fund, which is really exciting it's exciting for us, it's exciting for him to be able to take his strategy and invest off of it. But I think it's also good for the global economy.
So it's called your Global Transition Fund. So what does it really do? What kind of companies are you looking for that will be transitioned through this fund?
So this fund is doing three things. It will do our traditional renewables business. So new build renewables, solar, wind, mostly around the world, we'll be investing through this fund. More importantly, many companies, especially power companies, need to replace fossil fuel generation with renewables. So we are going to be helping companies and their balance sheets, because they just can't raise money, to be able to transition off of coal, some gas, to other things. And so we're going to be funding the transition to lower carbon.
Okay, but this is not an Elon Musk-cenary effort. You're trying to get pretty good rates of return from this, right?
Yes, we should earn excellent rates of return. This is, the good news about this is, we're going to be able to do great things for the world and earn excellent returns on capital.
Are you the largest infrastructure investor in the world?
Yeah, if not the largest, close to it, yes.
Okay. For people that don't really understand infrastructure investing, can you explain what you actually do? Because historically, governments would build an airport or governments would build a road or a bridge. What is it that you do with infrastructure investing that replaces the government but also enables you to make a profit?
So maybe to give you the broad spectrum of what infrastructure is, this is the backbone of the global economy. So anything behind the scenes that's provided to assist people move around, businesses operate. And so it's anything from telecom towers, data centers for cloud, toll roads, pipelines, transmission systems of electricity transmission lines, which sometimes you would see out there. So all of those things are the backbone of global infrastructure. And what's happened over the years is that governments can't afford, because they have so much debt, they can't afford to provide that infrastructure anymore. So that's moving into private hands. And because they're relatively consistent streams of income, we can leverage them quite successfully and therefore earn excellent returns on investment.
So for the average person who is listening to this, they might say, I assume, well, if the private sector is moving in and they have to make a profit, things are going to be more expensive in infrastructure as I use those infrastructure assets. Is that true or not?
No, in fact, this is where it's great. Not to denigrate governments, but many times they're inefficient in operating things, and we can finance them more effectively. So we can run things better because we're from private enterprise often, but more importantly, we can leverage them off balance sheet to the government.
I want to make sure I understood what you said. You mean governments are not efficient all the time? Is that what you meant to say?
Yes.
That's hard to believe.
Well, and that's why, that is why, David, that the infrastructure moving into private hands is good for everybody. It's good because it brings the debt down in the countries. It's good for individuals because they often get a better service and often at a lower price. And it's going to continue to, the amount of money into private infrastructure is going to continue to grow and grow because of those two reasons.
So today, what would you say the biggest challenges are in running a company like yours? Is it government regulation, the economy, geopolitical events? What do you worry about the most?
Look, everyone always thinks about geopolitical events, and one needs to be careful in business with everything they do, but in the fullness of time, all geopolitical events pass. Wars, explosions, recessions, all those things, they come and go, and they're really important at the time, but in the fullness of time, if you buy good businesses in great places and keep compounding returns, you'll earn excellent long-term returns.
As we talk, Russia has invaded Ukraine, but is that a big concern for you? Are you involved in Russia or Ukraine very much?
Yes. So firstly, no. I guess our rule is, even though we're global, we don't have to be everywhere. We're not trying to be everywhere. We don't sell consumer products generally. Maybe some of the businesses do, but we don't. So we don't have to be everywhere. And what we need is rule of law in a country, a culture of respect to capital, a place that's big enough to invest, and that we can operate with the standards we do in the United States, for example. And those two countries just, for whatever reason, didn't fit one of those things. And so we don't have direct investments. But look, every business around the world is going to be infected in some way through this. So there's no good news coming out of this.
What about the issue of inflation? In the United States, inflation is roaring at a relatively high rate compared to where we've been the last 30 years or so. Is inflation a big concern for you as an investor?
So the first thing is we invest in alternative investments. What alternative investments means is that we own businesses or assets which adjust their revenues over time. So we don't own fixed income instruments. Inflation goes up, fixed instruments, bad. But these adjust over time. So inflation actually is a positive for most of the things that we do. If this office building cost X to build, today, if inflation comes, it's going to cost X plus something, which means that the rent to justify a new building is more. So what it means is the income streams of all businesses and real assets are going up. The real issue is interest rates. If interest rates spiral out of control and go up a lot, then that changes the paradigm of businesses. We don't think that's going to occur. The compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle.
So if somebody is watching this, they say, well, Brookfield seems to have done pretty well. If somebody invested in the beginning, they would have compounded rates of return of 16, 17, 18% over the last 20 or 25 years or something like that.
They would have compounded at 20% annualized for 20 years and 17 annualized for 30 years.
Okay, so that's pretty good. So somebody's watching this says, I would like returns like that. Are retail investors able to invest in your company?
So we have many avenues. First, they can buy Brookfield stock. They can buy BAM shares, BAM, New York Stock Exchange. Second, they can buy some of our listed securities that are perpetual entities. Like for infrastructure, we have a listed entity that trades, and it's a great company, and we have one for renewables. But also, what's now happening in the investment management world is that we're taking all of those skills that we've used for institutional clients, and we're now creating products and putting them into the wealth networks. So we have a non-traded REIT for real estate, private non-traded REIT for real estate. We're going to create one for infrastructure. We're going to create one for transition and renewables, and we're going to provide those in the private wealth channels, in particular in the United States. And this is where Oaktree actually came in. We put a group together. They run the business separately, But Brookfield Oaktree Wealth Solutions now offers those products to clients in the marketplace.
So if you ever go to cocktail parties, and they used to exist in New York and other places, I guess they're coming back, do people come up to you and say, I'd like to invest with you, but I don't know whether I should invest in your stock or one of your funds? What do you tell people?
Yes, people often ask me that, and I tell them anything that has a B in front of it, anything that has a Brookfield in front of it, you should invest in. We're going to take care of you if you do. And whatever we're doing, I guess our whole life is about caring for those clients. Whatever client that is, that's who we want to take care of. So if we offer a product, we care a lot about it, and we want to make sure it makes money for people to what it's expected based on the risk-adjusted return.
So some people say, well, I don't really know what I should do with all the investment opportunities out there. I'll just put my money in an index fund because that reflects the market. What's the argument for giving money to somebody like you as opposed to an index fund, which is just going to track the, let's say, the bond market or the stock market?
Look, if an individual has very little knowledge of investing, owning a passive index fund in equities is probably the right thing to do. Put their money in, don't sell, just keep it in and let it compound over a long period of time. If you have any ability to consider and meet people that can provide products to you and you trust them, money should go into products like ours.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping. Look, people have conviction, or they invest if they invest for the right reasons, just keep at it. Keep your money in the market. Do not sell.
So of the big alternative investment management firms, most of the first generation leaders or founders are kind of moving up to being chairman or not running it day to day. You're a few years younger than most of them. You're probably one generation younger than most of these founders. So you anticipate you could do this at this pace for another 10 years, 15 years?
It's funny when you say which generation I'm in. I'm much younger, but I've been running the business for 25 years. So, but I'm having a ball. Like we have a really great time in doing what we do. We have a great team of people. We've got a good business, and we're all having fun. So I don't have any plans on doing anything else.
Now, you are obviously a very low-key person. You seem to be very modulated. Do you ever say, look what I built, and this is incredible, pound your chest and say, look what I built in one of the biggest companies in the world, or you don't have that personality?
Look, I would say I didn't build this. My partners and I built it, and the other 2,000 people built it. And it's not about me, and this company is going to be, what I'm most proud about is this company's going to be around far after I am, and it's going to be a great, successful business. The greatest contribution I can make in the next 10 years, 15 years, whatever it is to make sure the next team is in place to take this business to another level.